30 with a 100-point gain to start the week and start the day as well. Dhiraj Agarwal is with us, Managing Director of Ambit Investment Managers. Dhiraj, good to have you with us here. Great, as always, to speak with you. What's your sense? I mean, just do a quick check on earnings for us and what you're hearing from the research team at Ambit. How are they looking at it?
So earnings, you can divide that into two parts. At the EPS or the earnings growth level, it's looking quite strong, right? Almost 32% kind of earnings growth, similar to what we did in first quarter as well. But the top line growth is actually very pedestrian at about 7 or 8%. It's not disappointed this quarter as compared to last quarter. Last quarter, it was actually below expectations. So negative surprises on top line in this quarter is lesser as compared to last quarter. But at the volume and revenue level, that's a bit of a worry. And margin impact, which is flowing through the bottom line, which will actually start to fade away from next quarter onwards. So all hope at this point of time rests on the proverbial festive season demand and the second half demand recovery. We have been, every single year we wait for that. So let's see how that pans out. But that I would say is a little bit of a red flag on the earnings side.
Okay, a red flag on the earnings side. By the way, it's looking very good. Look at Zomato, 100% higher now for the year. It's a fresh 52-week high on Zomato, 119 rupees. Yeah, that's a classic case of consumption coming back in a big way, right? I mean, Blinkit. I use these apps on a daily basis, whether it's Zepto, Blinkit. I've become so used to all of this, right?
That's right.
It just goes to show how the consumption piece is picking up in a big way. So as you were talking about the festive season, wanted your understanding on how these platform companies are expected to do from your end. And despite the rally that we've seen in names like Zomato, does it still make sense to buy?
So the platform companies, the trend is unstoppable. As you rightly said, everybody is using it. Everybody is using it on a daily basis. So at some point of time, the call will be on what kind of valuation do we ascribe to what kind of growth which is there. So that's one part of it. So without going specifically into stock-specific recommendations, that's a trend which is here to stay. But when we're talking about the market as a whole, we have to see whether X is growing or Y is growing, it doesn't matter. But how is the entire aggregate market demand scenarios looking at this point of time? And that there are some signs of weakness. So Zomato, of course, is taking market share away from other traditional channels. The ease of convenience, and once you get used to it, you just keep on using it irrespective of a little bit of service fee or convenience fee, which they now charge. So that's a positive trend, that despite some service fee and convenience fee coming in, the demand is not really dropping. Unlike, let's say, in the past, where Indians supposedly very value conscious, and the slight amount of price increase, demand just drops off. That hasn't happened. But yeah, so
would you buy now or would you not?
Zomato, I would not comment on the specific stock price at this point of time. Yeah.
Dhiraj, when you speak to foreign investors, right, long term they're very bullish on India, but they haven't put money in the Indian markets, at least in the last 3 or 4 months. Do you think now that the trend of rising US yields has reversed, the cost of capital will come down? Do you think the FIs will start investing back into the Indian markets over the next, say, 1 or 2 months? And therefore, would the typical FI favorites come back into flavor?
I'm not sure about that. And if you actually zoom out, forget about the last 3 months, last 6 or 7 years, if you see FI holding in Indian markets has been pretty static in the 19 to 20% range. So this is a very strange case. Whenever you meet any global investor or asset allocator, they all love the country, they all love the growth which the country is promising or showing at this point of time. But when you come down to actually stock picking, they find the market's a bit expensive. And which is what I think continuously holds the incremental flow back. That's one part of the story. If we actually zoom out a little bit at the large cap level at least, adjusted for US dollar or INR depreciation versus the US dollar, we haven't actually done significantly better than the S&P 500. So which is another disappointment from a FPI large cap allocation point of view. But two interesting things are happening. 5 or 6 months ago, or maybe 8 months ago, if we see FI ownership in the mid caps, that has suddenly shown a sharp inflection upwards. Now, whether this is a short-term inflection which will fizzle out or whether it can continue. In fact, if you actually draw the FI holding to mid-cap chart, the inflection looks very similar to what we saw in 2016, at the beginning of 2016. And that lasted for about 1.5 or 2 years. So that could be a possibility, which is why, I mean, again, small and mid caps have lesser absorption capacity, so we might not see too much of large swing on the headline FI inflow number. But we have to actually dissect and see where they are selling and where the money could possibly be going.
You know, just a few more names I'd like to sort of highlight before, and we'll continue the conversation with Dhiraj. Look at Aarti Industries. It's up a full 7%. Huge gains, by the way. But it's such a bombed out name, right? And we were talking about chemicals earlier. Prakash was highlighting specifically Aarti. And of course, Sonal was talking about Aarti as well. So 7%, 492. It's coming off very, very beaten down levels, but it's coming up. JP Associates is up 4%. Huge volumes here again. I mean, now these are the smaller turnaround to be turned around or whatever you want to call it. But 5% on Suzlon as well. Suzlon is now past the 35 rupee level. So these two have done well. Idea, for example, had a great week, the last one. So in the same kind of line, the same kind of stocks there, which have been running up. Shakti Pumps is up about 5% or so, coming up with a volume. So there is enough and more happening in the broader screen, and it continues to show up in a significant way. Dhiraj, we also get into the election season, right?
Yeah.
Chhattisgarh polls tomorrow, then they've got MP, Rajasthan on the 25th. There is, of course, Telangana, Mizoram as well. But these are the big three Hindi-heartened states which markets are going to be watching out for very carefully. How important are these for markets, you think?
At least in the last few years, we have seen that the state election results haven't really mattered much as an impact on the markets. It will probably cause a few days of volatility into the result season for the state elections. I mean, last time around also when there was a bunching, I think 2019, right? When there was bunching of 3 or 4 states and a couple of them were upsets, barring a one-day fall, the markets didn't really do much. So the general belief at this point of time is that the nation is voting for states in center
in a different way.
And hence the earlier extrapolation of the state election results onto what might happen at the central elections is no longer that valid. So I think it's just a sideshow.
Okay, by the way, some stocks, right? Data Patterns reported a good set of numbers, strong set of numbers. That stock is up almost about 5% right now and has had a rollicking ride this year, up about 85% this year. PB Fintech is also up 4% post its numbers, so that one's looking pretty good. Metropolis Health had a strong showing a couple of days ago, so that one is up. And Nykaa, ahead of its numbers, today, Nykaa is up almost about 3% So all the platform companies getting a fresh set of wings after Zomato's good performance. But Dhiraj, what are your thoughts on the traditional, old economy sector, so to speak? Infrastructure, for example, everyone's expecting, a strong showing from the capital goods space, especially as we run into election season. But stocks like L&T have already given you great returns, 40% this year, very good numbers as well. Do you think this is a sort of a structural up move, and is there more to go on the upside, both in terms of valuation and growth?
I would be slightly cautious, and the reason for that is bulk of the story this year has played out. So this year's large amount of capex boost has come from government spending. Government capex is expected or budgeted to be up 25% this year. YTD we are already running at 45-46% growth. So which means unless the government can spend more than what they have budgeted this year, which is unlikely, I would expect some amount of slowdown going into the fourth quarter. So bulk of that money is already spent. Second, if you actually look at our fiscal deficit targets given by the government, which I think the government will stand by for FY25 and FY26, there is no way the same pace of government capital expenditure growth can be maintained. So look for some bit of softness in the government capex next year. Private is picking up, but not strong enough to take the full slack.
All right, Dhiraj, we'll leave it there for today. Thank you very much for joining us. By the way, you may want to listen to the next one. JSPL, I remember Ambit last week put out a call on JSPL, and you guys were negative comparing it to an earlier high debt cycle. And that's exactly what my colleague Sudarshan wants